Hello and welcome. Today I have with me our in-house expert Dhirendra Kumar and Harshad Patwardhan, CIO of Union Mutual Fund, joining us to discuss the launch of Union Multi-Asset Allocation Fund. Welcome, gentlemen.
Thank you.
Thank you, Ruchira, for having me.
Dhirendra, let me begin with you. Can you tell us what is the fundamental case for multi-asset funds?
Oh, the case for multi-asset fund is exactly the same as, what the case for mutual fund is. Convenience, diversification, instantaneous, and, ease. With 500 rupee, your investment gets into equity, debt, gold, and, gets rebalanced, reallocated, avoiding the duds, professional management. So, all of this combined together for your 500 rupee, 5,000 rupee, I think that's the deal. And the other case for, diversification per se or multi-asset is that, everything in this world, whether it be markets or segments of the market or people, things are cyclical. You do well sometime, you don't do well other time. And that is why multi-asset, because, and the third is the human psychology. Howsoever, knowledgeable or brilliant or, great in being able to predict the future we be, things turn around when we least expect it. When we think that, now it is all set, nothing can go wrong, that is when things turn around. So that is why I think if you believe in, all these things will keep repeating, then that's the case for multi-asset. And that is why everybody should consider it. You do it with a multi-asset fund, that is simple for anybody. Else anybody thinking of investments and assets and thinking of doing it prudently should have multi-assets.
All right, Harshad, moving on to you. What will be the construct of the Union Multi-Asset Allocation Fund specifically?
Sure. Thanks, Ruchira. Firstly, thank you, Dhirendra, because the question you asked, I couldn't have, done a better job than what Dhirendra did in terms of talking about the utility and the place of this particular category from investors' perspective. From our perspective, clearly it is possible to make this product very complex in terms of, multiple asset classes, etc. What we decided is to keep it really simple. The core of this or core philosophy of this category, I believe, is diversification. It's not returns, it's diversification. And that is really what our construct is. If you look at the assets where you can invest, broadly you can classify them into efficiency assets like equity, which generates growth, dividend, and scarcity assets, which are useful in times of stress, like gold. So essentially, this is a product as a core idea is diversification. If you look at the three core categories that we are going to have in Union Multi-Asset Fund are equity, debt, and gold. And if you look at last 15 years, I will not bore your audience with lots of data, but if you look at last 15 years, including this year to date, you will notice that 6 out of 15 years, and I'm talking about calendar years, 6 out of 15, equity was the best performing asset class. 7 out of 15 times gold was the best performing asset class, and twice fixed income was the best asset class. So this product essentially gives you an exposure to all these three. And as a result of this, because of the diversification, on a risk adjusted basis, you make very decent returns. That's really the core of this product.
All right, now that you've told me the construct as such, but what will fundamentally guide the allocation to equity? If it has to be between 60 and 80, so when it will be 60, where will the rest be? And likewise, when it will be 80, where will the rest be? If you can elaborate on that a bit.
Sure. Now, if you look at, clearly, this is an equity product from a taxation perspective. So to that extent, equity has to be on a higher basis, but on a net equity basis, where we can use the arbitrage to reduce the net equity. Net equity wise, the range is 50 to 70. So it's a fairly, narrow range compared to some of the other hybrid products. So let's say when equity, and how will we decide net equity should be 50 or 70? For our balanced advantage and equity savings fund, we have a model that helps us decide where the equity proportion should be. And that is on the basis of both valuation and momentum. These are the two criteria. I will not go into the details, but that basically indicates where the level of net equity should be. And that will be the guiding principle even for this fund. So let's say when we are at 50% net equity, gold will be at 25, roughly 20 to 25, debt will be 10, and the rest will be arbitrage. When we are at 70%, which is the max net equity, gold will be around 20% and fixed income will be about 10%.
Okay, and under what circumstances do you think will you allocate 25% to gold and silver? And any past occasion when you think you would have done that?
So the way we are, our thoughts are that gold is a very, very important asset class. I already told you last 15 years how many times gold has performed better. But I would say that the minimal correlation with equity and fixed income, that is really the advantage of gold in this. And gold, we are going to have a relatively stable allocation. So 20 to 25 is a very narrow range, right? So we are not really going to actively change that 20 to 25. 20 to 25 anyway is a very narrow range, and we will have to rebalance it if it exceeds or falls below 20. So I would say that equity is where we are going to dynamically change. Fixed income and gold are relatively stable asset allocations here.
Okay, but if someone is planning to hold this fund for long term, do you think investing in gold and silver makes sense? Because Warren Buffett has maintained that he doesn't see any utility in owning gold, and it's an unproductive asset. So what's your take there?
So as you can imagine, I have the highest regard for Mr. Buffett, who is inspired generations of investors. But as I said, the utility of gold in this particular category is that it is a diversifier. As I said, it is a scarcity asset. And the performance itself, if you look at, I mentioned 7 out of 15 calendar years, gold has actually done better than fixed income and equity. Also, if you look at last 20 years data, gold has delivered returns only lower than equity, and it has beaten all the other asset classes, including property. So I think gold, in a way, so to say, has proved its mettle. So I believe that in a multi-asset allocation kind of a fund, precious metal like gold definitely has its place.
Okay. And what specific criteria or market indicators will you use to dynamically adjust allocations between equity, gold, silver, debt within this fund?
So equity is where it is going to be more dynamically managed. I mean, we should remember that because the tax efficiency wise, we have to have equity. So the ranges in which it will change are fairly narrow. So equity is what we will dynamically change, 50 to 70. Gold is fairly stable, 20 to 25%. Debt will be closer to 10%, but where we can take duration calls, depending on where we are in the cycle as far as interest rates are concerned, we can change the duration. And the rest is arbitrage, which is like cash. So equity is a dynamic asset class there. Most others are more stable.
Now, considering the recent volatility in global markets, how does the fund plan to mitigate potential risks, and especially in the high risk asset classes like equity and commodities?
Right. So, as I mentioned, that we have a tested model to decide equity allocation, which we have used for our balanced advantage and equity savings fund. It is on the basis of both valuation as well as the market momentum. And that has just, clearly proved its utility in correctly guiding where the equity should be, net equity should be. So we will continue to do that. And you're right that, currently the backdrop for investment in terms of geopolitics is scary when you look around what's happening in the world, both politics, geopolitics, etc. But that's the reason, that's the beauty of this asset class, that by combining fixed income and gold to equity, on a risk-adjusted basis, it gives a very, very good and very compelling offering to the end investor. So I would say the inbuilt diversification is really the beauty of this product in times of turmoil.
Fair enough. Dhirendra, from a historical perspective, how have multi-asset funds performed during periods of economic uncertainty? And what insights can investors draw from past market cycles when considering this fund?
No, they have been able to withstand simply because of their sheer diversity. They're able to withstand the decline or a crumbling market much better. the most recent calendar year which I can recall is 2018, and multi-caps went down by 10-12%, or they were not multi-caps, whatever, the flexi caps or the large and mid caps or the index barely gave any return. And investors got very disappointed after an outstanding year of 2017. And that is what I was referring, that things turn around when you least expect it, and the whole pent up confidence in the market is zooming. And that is when actually this kind of fund becomes very difficult. Becomes very it builds a case for itself, because what happens is, when you have those time period, investors get into the zone of chasing recent past performance. If you look at 2018, which preceded by 2017, the best performing asset class was small cap, 54%. And then it was followed by a 18% decline. 18% decline is something which new investors will be extremely uncomfortable with. It can well drive them out of the market. And also that 54% return of 2017, most investors or most new investors would not have been able to capture it. But most new investors would have come at the fag end of the appreciation which has happened, and they will be tempted to invest. And that is when you lose. This is where I think it is this is a kind of product which can be, it can set the right expectation. It will not disappoint, and it becomes a very important and useful tool for anybody who is trying to pitch to new investors. And we still in India have a large number of investors, or majority of the investors, or majority of the prospective investors, who should be investing or taking a measured exposure to equity, investing for the long run, and that is visible in the statistics. It is beginning to happen. Mutual fund Sahi Hai campaign and recent performance is also driving them. But it is attracting most people to small caps or exotic funds, or sectoral and thematic funds. And investors, new investors should be very careful about that. And if they are able to embrace this, they will not be disappointed. 2018, this fund, when small caps went down by 18%, this category of fund on an average did not go down. It went up by a percent or two.
Okay. All right. Now, Harshad, moving on to you, the last question there. Given the fund's approach to benefit from equity taxation, how do you plan to maintain a tax efficient structure while ensuring optimal returns for investors?
As I explained before, that if you look at net equity perspective, we will, because we want to maintain 65% plus gross on equity from a tax efficiency perspective, we still have 50 to 70% kind of range available in equity. And as I explained, we are going to use that model, time-tested model that we have to balance between equity and debt. So we have a fair bit of variability available on the equity side. In addition to that, if you look at the two other asset classes, which is debt with the proper duration depending on the cycle, and gold, which is more like a stable allocation, I believe that, and we have done in our presentation, in fact, a bit of back testing where we have presented 3-year and 5-year rolling return data. So if anybody who's watching this program wants to refer to that, it will be very clear that it does offer a very a superior risk adjusted return for this product. So you get the benefit of taxation, at the same time you benefit from lower correlation, so diversification benefit. So ultimately, as Virendra Kumar rightly put it, for investors who have got used to looking at only the returns and not so much of risk or volatility, this is a very, very balanced product, and we urge people to look at this category and our fund in particular.
I would just like to add one more thing, which is a little topical, that one of the advantages of mutual fund, or one key advantage of mutual fund, which has not been talked about very strongly, or is not being appreciated as much, is that now you can't avoid capital gains tax, and capital gains tax has gone up in this budget, and the short-term capital gain has gone up, or long-term capital gain has gone up. If you're a long-term investor, mutual fund as a vehicle has become, a very efficient vehicle, because what Harshad does with his fund, it is completely tax sheltered. I give my money to him and he keeps buying and selling and does whatever. And it is completely tax sheltered. So it is not only tax sheltered only for the equity portfolio. When he is moving his money from debt to equity to gold, that all is tax sheltered, because I can hold it for 10 years and whatever be the gain, I will be liable only for that when I realize it. And that too, I can plan it depending on my income structure or when I need the money and things like that.
All right. Yeah, you wanted to add something, Harshad?
No, I think it's a very important point, and many people don't realize it. But if you did that calculation, what Virendra was referring to, the tax leakage can be very, very high. So it's a superb structure available for Indian investors. And I know that Dhirendra Kumar is probably has longest advocated mutual funds. So coming from him, and it's a very, very important point that people should really contemplate about.
With that, we've come to the end of this interview. It's a wrap for us. Now, thank you, both of you, for joining in and taking the time to speak with us. Thank you.
Thank you. Thank you.
Thanks, Ruchira. And Dhirendra, it was an honor to be on the interview panel with you.
No, it is a pleasure that, we are able to decode things at this time when you're launching one.
Thank you very much.
We'll come back to you to see how have you done.
Of course,
over
of course.
time. Yes, and wish you best.
Thank you very much. Really appreciate it. Thank you.